Welcome back to the Community Corner podcast, where we explore the companies in the S500 through the lens of behavioral finance. I'm Arnav.
And I'm Nikhil. Today, we're focusing on Morgan Stanley, a leading global financial services firm that provides investment banking, securities, wealth management, and investment management services. We'll be discussing how behavioral finance impacts their decision-making, diversity and inclusion efforts, adaptation to different markets, and how they compare to other companies in the industry. Let's get started.
Morgan Stanley has been a dominant force in the financial industry for decades, but from a behavioral finance perspective, how do biases like overconfidence and confirmation bias influence their decision-making, especially in areas like investment strategies and risk management?
Overconfidence is particularly relevant to Morgan Stanley's approach, especially in its investment strategies and market positioning. The firm's history of success and its reputation for financial expertise can foster a strong belief in its ability to navigate complex markets and deliver superior returns. This overconfidence can lead to aggressive investment strategies, where Morgan Stanley's managers might place significant bets on certain market sectors or financial instruments, underpinned by the belief that their expertise will lead to outsized gains. While this confidence has driven many of Morgan Stanley's successes, it also exposes the firm to significant risks, particularly in volatile markets where overconfidence can lead to underestimating potential downside risks. Confirmation bias also plays a significant role, particularly in how Morgan Stanley evaluates market data and investment opportunities. Given the firm's strong beliefs in its market strategies, there's a tendency to seek out information that confirms existing views and to discount or overlook data that contradicts them. This bias can reinforce existing investment strategies, even in the face of changing, potentially leading to a misalignment between the firm's strategies and evolving market realities.
And this combination of overconfidence in investment decisions and confirmation bias in market analysis has shaped Morgan Stanley's approach to financial services, appealing to both institutional and retail investors who value expertise and strong financial performance.
Exactly. Morgan Stanley's strategic use of overconfidence in driving investment strategies and confirmation bias in market analysis appeals to investors looking for a company that leverages its expertise to achieve strong financial results. However, this approach also means that Morgan Stanley must carefully manage the risks associated with market volatility and ensure that its strategies remain adaptable in the face of changing economic conditions.
Let's talk about diversity, equity, and inclusion at Morgan Stanley. As a global financial institution, DEI is particularly important for Morgan Stanley. How does this intersect with behavioral finance?
Morgan Stanley's approach to DEI is crucial, especially as the company operates in a global and highly interconnected industry where diverse perspectives can drive better decision-making and client engagement. From a behavioral finance perspective, strong DEI initiatives can enhance Morgan Stanley's ability to innovate and adapt by fostering a culture that values diversity and inclusion. A commitment to DEI allows Morgan Stanley to attract and retain top talent from various backgrounds, which is essential for maintaining its competitive edge in global finance. For investors, Morgan Stanley's focus on DEI can signal that the company is socially responsible and aligned with modern societal values, which can enhance its reputation and appeal to ESG-focused investors. Additionally, DEI efforts can help Morgan Stanley build stronger relationships with clients, regulators, and communities, which is vital for long-term success in the financial industry.
Investors are increasingly considering DEI when evaluating companies, especially in finance, where the ability to serve diverse clients and foster innovation is critical to long-term success.
That's right. By embedding DEI into their corporate culture and client engagement strategies, Morgan Stanley not only improves its ability to serve a broad range of clients but also strengthens its market position and attractiveness to socially conscious investors.
Moving on to global markets, Morgan Stanley operates in numerous countries, providing a wide range of financial services to clients worldwide. How does the company adapt to different markets, and what role does behavioral finance play in this?
Morgan Stanley's global strategy involves tailoring its financial products and services to meet the specific needs and regulatory requirements of different regions while maintaining its core focus on delivering strong financial performance. From a behavioral finance perspective, this adaptability is crucial for managing the risks associated with operating in diverse markets. Morgan Stanley's ability to navigate complex international regulations, such as those related to banking standards, investment laws, and consumer protection, allows it to maintain a strong global presence. The company's approach to understanding local market dynamics and adapting its strategies accordingly helps mitigate risks associated with regulatory changes, economic fluctuations, and geopolitical tensions. By ensuring that its financial services are relevant and compliant in different regions, Morgan Stanley can continue to expand its market share and strengthen its global brand.
And this adaptability is essential for Morgan Stanley, especially as they face competition from both local banks and other global financial institutions. Their ability to maintain their brand's relevance and leadership in different markets is key to their continued success.
Exactly. Morgan Stanley's focus on understanding local market dynamics and adapting its strategies accordingly allows them to remain a dominant player in the global financial industry while staying ahead of emerging trends and challenges. However, this also requires them to be proactive in responding to changes in global financial regulations, economic environments, and competitive pressures.
Now, let's compare Morgan Stanley to other companies in the banking and financial services sectors like Goldman Sachs, JP Morgan Chase, and Bank of America. How do the behavioral finance dynamics differ?
Morgan Stanley's dynamics are often compared to other financial giants like Goldman Sachs, JP Morgan Chase, and Bank of America, particularly in their approach to investment banking, wealth management, and competition. Morgan Stanley's strength lies in its focus on investment banking and wealth management, appealing to investors looking for a company that prioritizes financial expertise and strong client relationships. Goldman Sachs, with its emphasis on investment banking and trading, appeals to investors interested in a company that balances high-risk, high-reward strategies with market leadership. JP Morgan Chase, known for its extensive retail banking network and investment services, attracts those looking for a company that emphasizes broad-based financial services with a strong focus on global markets. Bank of America, with its comprehensive range of financial services, appeals to investors interested in a company that balances retail banking, investment services, and wealth management. Morgan Stanley's behavioral finance dynamics are shaped by its reputation for investment expertise, strong client relationships, and adaptability, making it an attractive option for the stability and growth in the financial services industry.
And unlike Bank of America, which has a significant focus on retail banking, Morgan Stanley's strength lies in its specialized services in investment banking and wealth management, appealing to a different type of investor and market.
Absolutely. Each of these companies has its own behavioral finance dynamics that influence how investors perceive their value and potential risks. For Morgan Stanley, the focus on investment expertise, client relationships, and global reach provides a unique value proposition in the financial services industry.
To sum up, Morgan Stanley's approach to business is deeply influenced by behavioral finance principles, whether it's through their investment strategies, global market adaptations, or their approach to DEI. But like all companies, they are still subject to the biases and perceptions that can influence investor behavior.
That's right. Understanding these dynamics provides a clearer picture of what drives Morgan Stanley's stock price and where the potential risks and rewards lie.
Thanks for joining us on this episode of the Community Corner podcast. Until next time, I'm Arnav.
And I'm Nikhil. Stay curious and keep questioning the narratives.